Hello, this is Data Trader Pro with a nightly market wrap. It's been about a week since we did our last market wrap. So yeah, basically where we left off was down here somewhere. I think we had a first part of the wave up, then we got a pullback, and then we got the up move. I suggested that based on the pattern and where we were with technicals being very oversold down here, that we would likely target what was then the 20-day moving average, which was about SPX 1940. We hit that. I don't think I've moved this arrow since. So yeah, we basically hit that, went peekaboo above, and we've pulled back. So we're approaching overbought on daily on stochastics, but there's some other technicals that disagree. The reason I'm showing you this first is we'll get to the site, and then we'll maybe go back and have a look at some hourly charts and daily charts and see where we stand. So let's go to the site and see what we can find there. Okay, today was a bearish trend day down, called by our indicator 10:15 a.m. Eastern Standard Time, as every day it does. A bearish trend day. We had actually a bullish trend day late last week. We had that big spike up rally, and then a reversal, and then we got follow through with a bearish trend day today. You could see that the dollar weighted buying pressure. It's our own basket of key market moving stocks, net volume of key market moving stocks. It just pressed down all day. It trended, and never relented. So definitely a bearish day in terms of internals. Our version of the intraday McClellan, the DTP MCC, pretty much at the bottom all day long, right off, almost right off open. So really no relief. Net issues, this is a combined net issues. It's our own index. It's combined NYSE and all the NASDAQ indexes. Was just down, and averaged was down, down on lows the entire day. Net volume, as it will always do on a trend day, they start at zero and they trend down. So you see really no buying spikes anywhere here. Just trend continued down. So internals bearish today, trend day down was the theme. Let's have a look a little closer. You can see that the high of day, low of day, we closed on NYSE advanced decline delineator much closer to the highs of the day, but that was still quite bearish at about 4-to-1 negative. NASDAQ a little even more bearish and closed a little lower than its high. Russell about 7-to-1 negative. Net volumes on all three were bearish all day. You could see that they never got above zero. Trends were an interesting mixed bag. NYSE closed bearish. NASDAQ and Russell are just peaking. Well, they're definitely neutral. There's, on trends, one is the dividing line between bearish and bullish. A number below one on trends is bullish, and we actually had a high of day on both the NYSE and the NASDAQ and the Russell trends deep into the bullish territory. So there may be some stocks, key stocks on high volume that are actually getting bought there right now. But we definitely don't have much in the way of follow through. We came into a support zone on the S&P and on SPY today and bounced, but it wasn't much of a bounce. We lingered around the lows at close. Let's have a look at the volatility picture. Volatility picture was definitely bullish volatility, bearish the market today, with VVIX, the volatility index here is represented by this gauge, plus 8%. That confirms a real volatility move. That generally you get VIX moving. If VIX moves without VVIX, generally that's going to be a short-lived volatility event. So definitely VVIX confirming this bearishness in the market. Futures, have not really moved from backwardation to contango. Certainly not in this expiry, and probably not for much of the prior months as well. So there's been a high, there's been an elevated volatility environment for quite some time. We started last week to bleed off, and VIX came down to about the 20 level, which is really a sort of a line in the sand for VIX, and it's its long-term mean. And when you get a VIX below 20 and certainly below 18 and 17, the market generally takes off. But we hit roughly the 20 mark and stopped there. So maybe that was a bit of an early warning that bullish run wasn't going to last very long. But anyway, nothing in the market is going to change drastically until we get VIX down into the gray neutral zone, and the other volatility indexes such as VXV and VXST, the short-term and the longer-term version of the VIX. This is the 3-month VIX. This is the 9-day VIX. So until some of that pressure comes off, that's going to represent, people, options players looking a little further out and having a bit rosier picture of the market than is currently seen. Some interesting stuff in the block trade space, particularly on the indexes. What you can see was a clear, and we noticed this on our Twitter and StockTwits page, was huge sell volumes, big sell prints late last week on the highs, and then basically the market turned immediately south from there. There was a pullback to retest these levels, but it never broke above. So this is why we say use these prints as a line of demarcation. Once you saw more prints here, that was further distribution. We never got above the levels of these. We had 21 million shares of SPY traded there in 2 transactions, and a number of other prints in the millions. So we came up to retest and we failed, and we came down. Now, we've seen quite a few transactions down at the lows, starting, I would say, early to mid-afternoon today. A lot in the 501K range. Let's go. We'll look at the Qs, and then we'll look at the summary page. Similar situation, distributing highs. The pattern is quite simple. There's accumulation at the lows, generally a retest, and then boom. You see distribution at the highs. You may see a retest. Actually, NASDAQ poked above this level, but it couldn't sustain it. It quickly turned down. Now we're seeing quite a few prints. Whether they're buys or sells will only be able to be determined by the fact that price stays above this 102.40 level roughly. That's on the high side. There's a few other prints, 102.39. Yeah, so 102.40 level is going to be key for QQQ. Moving on to IWM distribution. Distribution at the highs, selling, possibly some accumulation down at the lows. We did note, looking at options transactions, that there was about 14 or 15,000 of the next week expiry IWM 100 calls purchased today. So we may get, someone big is thinking that we're probably going to get at least a pop. I don't know what the target of that pop is. I don't know if this is going to be the start of anything. Internals have been quite bearish almost every day. The rallies are typical bear market rallies where we have a very strong update that's quickly reversed. So, folks, the trend is down. That's the basic picture. But, there are some signs that we're going to get maybe a move up, and I'm going to go look at the 1 hour SPY chart shortly, and there's some things that point to potentially another decent leg up before we continue down, at least. So let's look at the volatility ETFs and ETPs, which are VXX and XIV. So some trades that may be some distribution at the highs. Certainly we had accumulation at the lows. We've moved up $1 or more. Maybe some distribution. XIV just generally doesn't get the size that VXX does. But large print here the other day, and move up and distribution up here, and then we fell. So very similar to the pattern we've seen in the markets. Energy space has been interesting. So let's start with natural gas, UNG. We did see a lot of big prints up at the highs. This was the end of the day on Friday and into after hours. We posted this live on StockTwits and Twitter as a place to likely sell your natural gas position, because when they do this into a close going into a weekend, you're very likely to see a gap down on Sunday night in the futures. That's exactly what happened. We gapped down. There were some further sells here. We couldn't stay above those prices, and we gapped. We've continued down. Now there's some, today after hours we've got 500,000 shares purchased and some other transactions. So we'll get into that on the summary page shortly. USO's been a choppy mess. Huge rally up from the 27 level up to 34s on CL, the futures, the oil futures. USO rallied with that. A lot of distribution at the highs. Boom, we fell. Some either covering of shorts or fresh buys down here. We won't know until we have a look at the 857, 860 level. I think there were more at 860s, low 860s level on USO. If we can't maintain above that level, then stay short or stay out. Let's go to the summary page. The summary page is going to give us, a virtual time and sales of all the block transactions, and we can see this. We can see somebody 501,000 shares is generally I've found to be. Well, I don't know if it's always a buyer, but he seems to come in on local lows quite often and start picking up positions when there's weakness. 501, 501, 1,000,002, which is 501 times 2, 501, 501, a large order here, and then lots more around 500. I think there's more 501, 501 down here. That was the theme of the day. We'll call him Levi 501 because he trades in 501,000 share tranches, and he was very active today. So my gut feeling would be that he's a buyer. He's accumulating down low here, because large institutions generally do not buy the tops and short the lows. They're the ones moving the market. So I would watch these levels, the 190 20s. He was a buyer, or someone similar was a buyer, even lower. Down to 190 flat, even the high 189s into support. So QQQ, we mentioned those levels before. 102.40s roughly is going to be key to hold. IWM, the big options player on the 100 calls. So we're going to look at from 99.88 up to this 137 level. If we can get above that, then I think we're looking up a couple of dollars. The USO, let's confirm the USO size or price, and what do we have here? Oh yeah, okay. So we've got all in the 855 region. Those are smaller. The big guys are in this 857. That's pretty much it for the day. There was a lot of small size block trades, but the big guys were we're 857 on USO. So let's move on. I want to go back to the technicals chart and have a look at the picture of what I think SPY is doing on a daily basis. So what we did was we came up, we made a wave up, pulled back. I mean, this, I think anyone who has an honest look at markets knows that things generally don't go straight up and straight down, aside from our move in August, which was a very rare event. I don't know how many sigma event that was, but it was it was probably 4 or 5 standard deviations from the norm. We just went straight down. We had a huge down day. There was capitulation, and then we chopped around a bit, and then we started moving up. So generally what we do is we'll move in waves. We'll move in, corrective moves are generally 3 waves, retraces, and they generally go into resistance levels, and this one almost touched the R1 on the daily, and then we dropped again, and now we're at this sort of just about touch this S3 daily pivot support. I think given the large amount of block trades down at these lows, right at this pivot area, we looked at this was in the 189s. We never got down quite that low. I think we got down to the 189.60s or something. But a lot of these block trades came in this region, and because it's in a key support zone, I would think that our next little move is going, whether it's a local little pop up and then we continue down, we don't know yet. We're going to have to keep an eye on those levels, but it looks like we should move up, unless this is the beginning of, that was our 3-wave correction, now we start another down leg. That's always a possibility. That means the 189 level would have to break. All of those block trades that were clustered around here would have to fail, and in that case we'll assume that they were sells instead of fresh buys, and the market should continue to new lows at that point. So really we're at an important level here. Let's look at this on a hourly chart and see another pattern that I'm sure you people are all familiar with. Head and shoulders patterns. We've got something like this, and then our next move should be a decent rally. Now, I'm not targeting necessarily this area. We don't know. We're gonna have to start a rally and see if we can climb above some of these levels. Certainly over 192 and then 194 zone. Certainly clearing this last nominal high will be important. So we've got a bit of a range to play with. As far as the downside scenario, it's just below us. So don't stay long hoping for a new all-time high or a big rally, or at least a larger retrace rally, if this low breaks, because there's a lot of air below there, and then we're going to be looking at support here and then here, and if that doesn't hold, we're going to retest this for sure, and if that doesn't hold, there's a lot of air under the market. We've been up for several years now, as you all know, so support levels start getting into the mid to low 1700s on S&P from there. So anyway, I think the only other thing I really want to look at were let me go to this, were the bonds. So here's a chart of a table of a number of the, so this is the TLT, which is the 20 plus. It's actually the 30-year bond, but they need at least 10 years. They can't have any less than 10 years off of their life, so it's 20 plus year bond fund. So it's really tied to the 30-year bonds. The 7 to 10 years, so the 10-year Treasury note, the 3 to 7 year, which is roughly equivalent to ZF futures, the 5 years, the 2 years, and then the T-bills, the really short dated stuff. So money tends to move, gets redistributed among, they call it the yield curve. So basically money will move in and out of the short end, and then it moves back from the short end to the long end to the short end, and so on, depending on where risk is positioned. So right now, all of them have been going up. We did have a drop. This is hourly, so we did have a drop in the front end, the bills today, even though we were making highs. New lows, new local lows. This end was dropping, although everything else rallied and basically ended the day near highs. So the bond space is basically saying there's a bearish position for the market, but the VIX space, it's bearish, but it's not at levels of a panicked bear market. I mean, you're in the low 20s on VIX, 22 level. It's bearish, but I would say it's only slightly bearish. You can see that the trend has just basically been going down since we made the highs on the VIX space and the lows on the indexes not long ago. So it's not. The VIX space and the bond space are a little bit at odds with each other right now, and generally bonds are considered the smart money in the market, and I would watch very closely for the bonds. Bonds are getting a little toppy on technicals. Any kind of pullback on bonds, I think, will be kind of sharp and swift, and we'll see a market rally. So that may be what we're setting up. Bonds may be topping. VIX will drop if that happens. That's VXX. This is VIX. So we're looking for a topping move, which will confirm our next rally phase up in the S&Ps and the broad market. If that doesn't happen and bonds just continue up, well, I think we've had our corrective bounce and we're off to new lows. So stay tuned. This is Data Trader Pro for our nightly market wrap. I think that'll do for tonight. And thanks for joining. We'll be back tomorrow.